Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Today, we're cutting through some of the market fear.
A lot of fear.
Yeah, a lot of it.
Cleo.
We're here to bring you the essential knowledge from your source material. We're in a strange time. It's mid-December 2025, and the price action, well, it suggests panic, but the underlying infrastructure is just screaming growth.
It's a complete paradox.
Yeah.
I mean, we're seeing Bitcoin really struggling, sitting well below $90,000.
What's it at now?
Right around 88,700. And this is right after what should have been a really positive outcome from some major U.S. financial policy announcements.
And the sources, they confirm this conflict. On one hand, you have the prices reacting to, negative sentiment, the noise.
What some in the source material will call TDS against the current administration, but that's just a narrative layer.
Exactly, just reporting what's there. And on the other hand, you have these macro fundamentals, especially around regulatory clarity in the U.S., that they've never looked stronger.
What's so fascinating is that the foundation is being, dramatically reinforced. It's removing massive amounts of legal uncertainty for the biggest financial players on the planet.
But the returns aren't immediate.
Not at all. So the short-term market narrative is just completely dominated by fear.
So our mission today is pretty simple. We ignore the noise. We dive into the concrete facts. We're going to distill these major institutional and regulatory moves that are basically setting a template for global adoption.
We'll be looking at tokenization pilot programs, crypto firms being officially integrated into the federal banking system.
And even a stunning €1 billion bid for a famous European soccer club. We're tracking the institutional money here, not the day traders.
Okay, so let's start by contextualizing the current sentiment, because the data, it really supports this feeling of caution, if not outright fear.
Right. The fear index, according to the data, is sitting at 27. That's firmly in the fear range. But as we always say, focusing only on the price or that index can be misleading. The real health indicator is liquidity.
Exactly. The volume of stablecoins is the key metric. It reflects the actual dry powder that's ready to be deployed into the market. Right now, Tether USDT volume is around $52.1 billion.
Now, 52 billion sounds like a huge number, but the source material suggests we need that volume to be, well, a lot higher to sustain a new bull run.
A lot higher. The estimate is north of $150 billion to genuinely reach and hold a new all-time high.
So we're operating with what, about a third of the liquidity needed?
Roughly a third of what the previous high required. So this sluggishness in price action and the low fear index, they're actually perfectly rational responses to the current liquidity constraints.
That really puts the market in perspective, doesn't it? And when we look at ETF flows, we see something interesting. It suggests more of a rotation, not a total retreat. We had total inflows of about 24.6 million recently, with Bitcoin ETFs being the main driver at 41.9 million. So institutional interest is still trickling in, and it's favoring Bitcoin.
But here's the counterbalance, and this is crucial. Ethereum ETFs are seeing significant outflows. Almost $48.4 million out.
So what does that suggest?
It suggests that the big players aren't necessarily leaving crypto entirely. They're just reallocating their capital. They're moving out of Ethereum and into Bitcoin, or maybe even mid-caps like Solana.
Which is still seeing inflows.
Right. Solana's at about 16 million in, and XRP is at about 1 million, so it's a shuffle.
It really feels like institutional money is just consolidating risk.
Yeah.
Or maybe adjusting based on what they expect from regulators around specific chains. And if we look at decentralized exchange volume DX activity, the sources call it absolutely terrible.
It is. The volume is low, just 7.24 billion. And critically, the dominance of DX activity is at 26.8%, which is the lowest we've seen in about 6 months.
And that suggests retail has cooled off.
Dramatically.
Yeah.
The trading volume is moving back towards centralized regulated exchanges, which, are off of the preferred route for institutions entering the space anyway.
But here's the positive countersignal. Treasury inflows are up to 2.42 billion. What does that specifically track for us?
So Treasury inflows measure the capital moving from institutions, businesses, sophisticated investors, and they're buying proof-of-stake assets. Think Ethereum or Solana.
But not for trading.
No, not for trading.
Yeah.
They're holding them on their balance sheets, using them as network validators. This is long-term operational investment. When this metric is high, it really reinforces the idea that institutions are building deep, long-term exposure.
So the message from the data is clear. Retail is low, liquidity is tight, but long-term institutional commitment through ETFs and treasury holdings, it keeps building.
Even if Bitcoin is down almost 2% in the last 24 hours.
Right.
And just a quick altcoin note. Binance BNB coin at a 121 billion market cap has surprisingly overtaken Ripple at 120 billion.
That is noteworthy, especially after Ripple just got its ETF approval.
It shows fundamentals and regulation don't always translate immediately into market cap dominance.
Okay, let's pivot now to the macro developments that, frankly, should make everyone look past that $88,000 price tag. We are literally witnessing U.S. regulators lay down an official template for controlled tokenization.
And for integration. It's a template the rest of the world is almost certainly going to copy.
This is the core story, isn't it? These moves give huge comfort to institutions because they clarify the boundaries.
They do. They show regulators aren't trying to block innovation anymore. They're trying to contain the risk.
Let's start with the SEC. The U.S. Securities and Exchange Commission trading and market staff issued what's known as a no-action letter, and they allowed the depository trust company, the DTC, which is, it's the central ledger for all U.S. security settlements, to test a pilot program for tokenizing certain securities on an approved blockchain.
This is a monumental shift. Just think of the DTC as the master custodian for all of Wall Street's, trillion-dollar trades.
The master quill.
Exactly. And what the SEC has allowed is for DTC participants, your big brokers, your major financial institutions, to transfer tokenized security entitlements directly between registered wallets.
But, and this is key, the DTC still holds the master record. It still handles the final settlement.
Yes.
For now. So what's the tangible benefit right now? Why should you, the listener, care about this pilot program?
Well, it addresses the core inefficiencies of traditional finance, counterparty risk, and locked capital. When securities settle faster, maybe instantly instead of in days, you reduce that counterparty risk dramatically.
And you free up capital.
Billions of dollars in capital that financial institutions are required to lock up during those settlement periods.
Yeah.
This clarity from the SEC, it just reduces the legal uncertainty for every major firm looking to build these tokenization products.
But we have to stress, the source materials are clear on this. It's limited, it's experimental, and it is not self-custody. Not yet.
Precisely. It's innovation under very strict regulatory supervision. And this SEC action is perfectly paired with another massive development from the Office of the Controller of the Currency, the OCC.
The OCC just approved 5 major national trust applications, and this includes key crypto players like Circle, Ripple, Fidelity Digital Assets, and Paxos.
This officially, definitively brings these crypto firms into the federal banking system. They now join about 60 other national trust banks under direct OCC supervision. The government is essentially saying, these companies are not just some tech startups.
They're legitimate.
They're legitimate, federally regulated financial institutions.
The credibility factor here is it's priceless. Why does national trust bank status matter so much to the whole institutional ecosystem?
It just opens doors that were bolted shut before. Institutional capital, we're talking corporate treasuries, pension funds, major investment managers, is often restricted by its own charter.
They can only deal with federally regulated banks.
Exactly. So by getting OCC approval, these firms can now safely handle custody and asset protection for the largest pools of money on the planet. It formalizes crypto as an integrated part of the entire U.S. financial structure.
And we're already seeing these new permissions translate into real-world use cases. Let's look at institutional adoption, specifically debt issuance on public rails.
We saw a landmark transaction. JP Morgan arranged one of the first U.S. commercial paper issuances for Galaxy Digital Holdings. And the really astonishing detail here is they used the Solana blockchain.
That is a detail that would have been unthinkable 2 years ago.
Yeah.
JP Morgan and Solana in the same sentence, leveraging a public, permissionless infrastructure for institutional debt.
I know.
So what exactly is commercial paper here?
It's just a fancy term for short-term, unsecured corporate debt. It's how companies often finance things like inventory or short-term ops. In this case, the paper was bought by major asset managers like Coinbase and Franklin Templeton.
And in settlement.
Handled using the USDC stablecoin.
So the significance here goes way beyond just the names involved. This validates the entire concept of tokenized debt.
Absolutely. This shows profound institutional confidence, not just in the asset class, but in the underlying infrastructure itself. Using Solana for this demonstrates the potential for, efficiency, near-instant settlement, transparency in capital markets. This one transaction sets a major precedent.
Okay, now let's switch gears to another major player that's using its financial strength to move into some surprising territories. Tether.
The leading stablecoin issuer.
And they are making a strategic pivot into European soccer.
That's right. Tether, the issuer of USDT, has put forward a binding all-cash proposal to acquire Exor's majority stake in the legendary Italian football club, Juventus.
And the money they're committing is huge, up to €1 billion to support the club's growth. But what's the strategic reasoning? I mean, a stablecoin issuer buying a European soccer team feels a little disconnected from digital finance.
It's a very calculated move based on 3 things: visibility, diversification, and regulatory arbitrage.
Okay, break that down.
First, it's incredible global branding. Second, it shows Tether's financial stability and depth. They can deploy €1 billion instantly. That sort of confirms the strength of their reserves, right? And third, it's diversification into real-world assets and high-value fiat businesses.
So they're using the massive cash flows from stablecoin issuance to secure regulated, recognizable assets that operate firmly in the traditional finance world.
Precisely. It secures a major fiat rail. Plus, our sources note that Tether's been diversifying heavily elsewhere.
Into what?
AI and agricultural technology. This is all about positioning Tether as a fundamental infrastructure company, not just a stablecoin provider.
That's a perfect bridge to our regional spotlight, because the Middle East, particularly the UAE and Saudi Arabia, is proving to be this new frontier for integrating advanced finance and AI. They're mirroring Tether's own strategic interests.
The Gulf states are aggressively leapfrogging older tech. They're not just adopters anymore, they're innovators, especially where AI intersects with cultural reach and high finance.
Let's look at Saudi Arabia. They introduced Ralph, the nation's first AI influencer.
Created by a leading Saudi lab, it's fascinating from a digital identity perspective.
It is. Ralph is designed to represent a modern Saudi woman living in Riyadh, combining advanced AI with deep cultural insights. It's a very scalable, very relatable model for brand storytelling.
And the metrics confirm it. It was an immediate success.
Gained 2,500 Instagram followers in just 2 months and over 1.1 million views in 30 days. Already completed 3 successful brand collaborations.
It just shows how rapidly they're deploying these advanced digital identities. And this concept of a scalable AI-driven representation, it's directly applicable to digital assets and tokenized interactions.
And meanwhile, in the UAE, Abu Dhabi is strengthening its role in global risk management by injecting AI into reinsurance.
RIQ Reinsurance Intelligence Quotient. It's an AI-native reinsurance platform launched by ADQ, one of Abu Dhabi's sovereign wealth funds. And they just signed a memorandum of understanding with the global giant Swiss Re.
And this partnership is all about advancing risk data and powering sophisticated AI reassurance solutions. Why is this so critical to the bigger financial picture?
Well, reinsurance is a system that insures the insurers.
Yeah.
So by integrating global expertise from Swiss Re with these advanced AI platforms like RIQ, they're developing next-generation data-driven insurance solutions. It speaks to the broader theme we've seen today.
Which is?
Using technology, whether it's blockchain or AI, to mitigate systemic risk and increase efficiency in these trillion-dollar markets.
So it demonstrates that the global investment thesis for major players, whether it's tenor or sovereign funds, is really converging on AI and secure digital ledger tech.
It's all about making finance faster, cheaper, and safer.
Okay, let's synthesize all of this, all these macro positives, the SEC pilots, the OCC approvals, the public blockchain debt issuance, with the listener's most pressing question. Is tokenization moving fast enough, or are regulators still holding the markets back?
That is the perfect question. And the analysis suggests tokenization is moving cautiously, not slowly. The speed is dictated by the sheer magnitude of the market we're talking about.
This is the multi-trillion-dollar global securities market.
Exactly. You can't rush that. Even slightly could cause catastrophic instability.
And it's so important to acknowledge the shift in regulatory mindset. We've moved from this historical approach of just outright rejection, the no, to this current stance of cautious acceptance.
Or let's test, like the SEC DTC pilot.
Right.
Look, the cautious approach requires permissioned environments, approved participants, heavy oversight. But it's necessary to ensure financial stability. The good news is that once these tightly controlled pilots prove they're safe and efficient, which they're designed to do, the regulatory green light that follows will unlock massive amounts of capital.
So we can confidently say the foundation is being poured right now. The pace might feel frustrating in the short term, but these structural changes, from the federal banking system to Wall Street's back end, they are reducing uncertainty at an institutional level.
The sources are pretty unanimous. Tokenization is absolutely poised to be the dominant institutional narrative for 2026. The ultimate takeaway is this. Don't let the short-term price volatility, driven by constrained liquidity and market narratives, distract you.
The long-term macro reality
Is an accelerating, regulated integration of crypto infrastructure into the very core of mainstream finance. The infrastructure is solid.
And that infrastructure is being built largely according to a template set by U.S. regulators. So if the SEC and OCC are actively establishing this global framework for controlled tokenization and banking integration, you should be asking yourself, which global financial hub or which major nation will be the first to formally copy this U.S. model? Because once these pilots successfully prove the efficiency gains, the real-time settlement, the vast reduction in locked capital financial institutions worldwide will be forced into a competitive race to adopt this new model, potentially automating thousands of clearing and settlement roles far, far sooner than the market currently anticipates.